Hello friends, welcome you all to yet another video of stock analysis for long-term holding. This is Kingsley and in this video we are going to do a stock analysis about the company called Tata Coffee. First, let's understand their company profile. So, Tata Coffee is one of the largest integrated coffee plantation companies in the world. This company owns 19 coffee estates in India. It has tea estates in Karnataka and Andhra Pradesh and is also engaged in the production of pepper and cardamom. Tata Coffee entered into a coffee sourcing and roasting agreement with Starbucks Coffee Company to supply coffee beans to its coffee chains in India and US. Tata Coffee has entered manufacturing of plywood and block boards under the brand name of Tata Consort. There is a talks going on in the market that this company buying out Coffee Cafe in the next few months, though it's not confirmed by the management. Let's walk through some basic details of the stock. First, its current market price is 160 rupees. Its market capital is 2,995 crores. Its 52-week high and low is which is 180.90 rupees and its low is 69.25 rupees. Considering this current market price 160 rupees, which indicates that the stock is moving towards an upper direction to its 52 weeks high, which is a good sign. Its face value is 1, which is kind of low. Its trailing 12 months EPS is 7.16 rupees, which is again EPS looks low here, and its trailing 12 months PE ratio is 22.40, which indicates that the stock is kind of an overvalued. So PE ratio is always should be anything between less than 15 or anything between 10 to 15. It's a good call to buy the company, buy the shares, but anything above 15 is something kind of an overvalued stock. Its book value is 97.45 rupees. Its PB ratio, which is book value per share, is 1.65, and its dividend yield is 0.94%, which is not that great. Its return on equity is 10.3%, and its return on capital employed is 14.5%. Let's get into the granular level to understand its historical price range. So I collect the data for last 5 years here. First, its market price, which is in March 2017, the stock was trading around 126 rupees, and in March 2021, its price range is 160 rupees, which shows a good sign and good improvement on the market price range. But if we check in between March 2018 to March 2020, there is a huge downfall on the market price range. In fact, in March 2020, the stock was trading around 56 rupees. So now it gave a more than 100% return in just 1 year. That's a good call. And the next is EPS. In March 2017, its EPS was good, 8.09, but after that again there is a deteriorating performance between March 2018 to March 2020, which is 5.71, 3.68 and all. But in March 2021, there is a decent comeback on the EPS side, which is 7.15. Good. And its price to earning PE ratio, which is mainly for the investors. So, as I always say, PE ratio, anything above 15 is a kind of overvalued stock. If anything between less than 15 or between 10 to 15, that's a good stock, we can buy it for that current market price. So, this stock, let's just check its March 2017. The stock was, its PE ratio was 15.60, and in March 2018 and 19, the stock PE ratio was 19.80 and 24.50, which is kind of a very high PE ratio. And in March 2020, its PE ratio was 12.73. So that was the right time to buy the stock. But if we check in March 2021, it's showing 22.42, which is again a higher PE ratio value. So we can buy the stock, but we need to wait for the right time, right consolidation, because its PE ratio is very high, and which indicates the stock is currently trading overvalued. All right. And next is its dividend payout. Its dividend payout between March 2017 to 2020 looks good here. The stats look good here, but in 2021 it just gave 0.94%, which is kind of very low comparing the other years. Its return on equity is also in March 2017, its return on equity is 14%, but in between 2018 to 2020 there is a deteriorating performance, which is 9%, 6% and all was the return on equity. But in March 2021, again a good comeback, which indicates, which is showing 10%. And return on capital employed between March 2018 to till date, there is a significant improvement on the return on capital employed. And again, the stock performed well, and return on capital performance was good in 19 was good in March 2017. Overall, this stock performed well in March 2017. After that, there is a huge downfall and some collapse on the numbers point of view between March 2018 to March 2020, and there is a good comeback in March 2021. So, comparing the last 3 years and the current year report, this March 2021, this stock is performing really well. Let's check the profit and loss report. So, sales wise, there is a good improvement. Uh, in March 2021, it's showing 2,254 crores. Comparing the other years, in March 2017, it was around 1,606 crores. Good. And its operating profit is also, there is a significant improvement on the operating profit side, which is like in March 2017, they got an operating profit of 388 crores. And in 18, 19, 20, there is a huge downfall on the operating profit, which is like in March 2019, it just 238 crores. And in March 2020, there was a good, kind of a good improvement, 319 crores. And in March 2021, it's 390 crores, which is a kind of good sign here. And its other incomes, okay, depreciation wise is also kind of uh, depreciation is also increased over the last 5 years, and profits before taxes is also increased, and its taxes and its overall its net profit is there is a significant improvement in the last 3 years, March 2000 between March 2018 to March 2020, and there is a huge high with comparing the March 2019 and 20 report to the current statistical report. In March 2019, the net profit was just 68 crores, and in March 2020, it was 82 crores. But in March 2021, it's 133 crores. Comparing the 2019 report, it gave almost 100% on the net profit side, which is a good sign. But again, in March 2017, its net profit was 151 crores. So comparing this current net profit is kind of low, but comparing the last 3 years report, there is a good comeback on the net profits end as well. So overall, this looks decent and this looks good. Let's quickly check its balance sheet and shareholding details in moneycontrol.com. So I'm already in the page. So um, I'm going with balance sheet report. All right. So share capital wise 18. All right. It's reserves and surplus. There is a good improvement on the reserves and surplus comparing the other years. This year it was March 2021. It's showing 1072 good, and its current liability is March 2021 198 crores, and March 2020 comparing the other years, the current liabilities has been decreased to 198 crores, and the other liabilities is kind of 50 to 60 crores range. So the total liabilities is 1349 crores, and their fixed assets is comparing the other years. Their fixed asset, there is a slight uh, down in on the fixed asset side. So in March 2021 it's showing 467, and in 2020 it's 489 fixed assets, and in current asset side there is a good improvement. It's 635 crores in March 2021, and 2020 it was 531 crores, and in 2019 it was 505 crores. There is a good improvement on the current asset side. So comparing the current assets and current liabilities, there is a good improvement on the current asset side. Fine. And their contingent liabilities, which is an unexpectable unpredictable liabilities, is zero in this year. That is another good sign for the investors. Comparing the other years, this year it's just showing zero, which is really good. Let's check their shareholding details. So 57.48% shareholders are from promoters end, and public is holding 36.45%, and domestic institutional investors holding 5.97%. So let's check here. Promoter wise, there is a standardized percentage between March 2020 to March 2021, and the foreign institutional investors, they just started investing a 0.1% in March 2021. That is good. And domestic institutional investors, comparing December 2020, the domestic institutional investors slightly decreased their shareholdings in this company. And public wise, it's almost same. All right, let's check the stocks graph now. Go with 1 year report. So the stock current price is 162 rupees, and 1 year before 18 May it was trading around 72 rupees. Overall, to sum it up, this is a good company to invest for a long-term investment. And when is the right time to invest in this stock is when its price range goes down between 120 to 130 rupees. Why? Because its current PE ratio clearly indicates that the stock is trading under overvalued of 160 rupees as its current market price. So when it comes down to 120 to 130 range rupees, that's the right time for a long-term investor to invest in this company. I mean, to accumulate the stocks and hold it for a long-term period of time. There is a disclaimer in this video. I'm not a SEBI registered professional. Before you invest in any company, please do your own research as well. And the content in this video is just out of my thought and just kind of an educational purpose. Thanks for watching. If you want me to do an analysis about any companies, please leave a comment. And I see you all with another interesting video shortly. Till then, this is Kingsley signing off.